Hello everybody, Buston here. I hope you guys are doing well, having a great day or a great night. And before jumping to the charts, don't forget to smash the like button, share with your friends and subscribe as well. Your support is very important. And let's do it. So you guys know the drill. We start from the macro all the way to the micro, okay? Uh, if you are not familiar with my method, you can check my previous videos and you will have a better idea. So first things first, let's take a look on volume. We have ranging volume here, already covering the previous bearish volume, which is all the way bullish. And let's take a look also for the OBV. Okay, so here we have a bullish divergence, not a big one, but probably it's because we have only a few data here for Tezos on Binance. Okay. Now let's take a look on the another thing. First the naked chart, then we bring the arc levels for a better understanding. And just a moment. Yeah, so as you guys can see, this whole range right here, close to the top, it's like a zone of distribution, but it's not bearish, okay, because the bulls is still in control and they are not only making higher lows, but they are defending very key levels that I'm going to show you in a few minutes. Okay, so the previous red candle here was not somewhat bearish, but we have this evening star on the middle, which was bearish, also inside the previous rejection. And then we end up with this bearish candle. Probably some people, folks, taking profits based on this candle. But right after, the bulls show up and stomped all of them. They bought everything. This is amazing news for the bulls. Let's take a look now on the weekly, and now let's look at our key levels for a better understanding. So if we only look at the chart this way, close, we won't be able to see what is coming, what is going to happen, okay? So this is one of the reasons we start from the macro always to the micro, okay? And just a moment, let me check here. Just XTZ USD, just to see where it's the beginning. So September 17. Okay, let me see if we have here. Okay, we don't have all the data. Let me take another look here. Oh, okay, so we already had a bigger all-time high, because this is very important to acknowledge. I don't want to talk about things that are not in the chart. So let's take a look here. The high here is 12.18. So let's acknowledge this level, right? 12.18. Right here. Okay, let me see if I'm not missing anything here, because I can't use this chart here because I can't use my Fibonacci setup. Okay, so that's the way why I use the other one. And it's very important to acknowledge the ranges by the cents. Okay, so again, 12, 18 and 07. Just a moment. 12, 18 and 27 cents, right? December 18, let me see, just a moment. I was not expecting for this. So it's way below 0.31. Just one more moment. Okay, perfect. So this is the correct setup for the Fibonacci. And Yeah, so let's go one step at a time. So folks, this was our previous all-time high. Okay, and all this projection that I made here, that you guys can see, was based on this data only. Okay, I just figured out the previous all-time high was here. So the thing is, in the long run, the target for the later bullish continuation, in my humble opinion, it's way above 34. Okay, and so again, if you're not familiar with my method, you can check my previous chart and analysis, and you will understand what we are talking about here. Okay, but let's go. So this actually is not wrong, is not right, because we have the previous one. So let me see here. High, low. Okay, so what we may expect here, folks, any move, let's use a guiding line here, just a second. This should be easy, but the lack of data is always complicated. Let's go from here, okay? Just a moment. Yeah, I like things straight. So this is for the first range, as you guys can see on this Fibonacci setup, which is from the previous all-time high to the bottom, okay? And so what we may expect next for later bullish continuation, okay? And remember, first from the macro, then we jump into the micro. We can expect a first move on this range right here, just a second. Yeah. So this range right here can be our battle of midway. Okay, so what does it mean? Well, what is this? This is the range where we can probably trade inside for a while before bullish continuation. Okay, don't expect for moves like this. Okay, not going to happen, because we need joints. It's like joints connections all the way up or all the way down. That's how we develop growth and expansion. Okay, and yeah, at very key and specific levels. So this can be our battle of midway, and then a way for us to measure this guy here. Let's take a quick look, just for the sake of this example. Let's measure this one right here. Sorry, it's the other way. The moment. So we had 4,100, and let's see how this is, where we will stop on the way up. 4,800. Okay, folks, so that leads us to 559. Okay, so I'm not calling for 559 now. What we are acknowledging here, it's a possible scenario in the coming years, in the long run. Okay, like I said, we are not looking or expect moves like this. That's not how it's going to happen. If you look here on the bottom in the time frames, you will see, just a moment, 2025 January. Let me use a black here. Okay, so can you guys see all the time that we still have ahead? So we are talking about almost 4 years plus. Okay, 4 years and 5 months. So in the long run, it is possible to reach this target? Yes, it is possible. Also, I have another Fibonacci setup. Yeah, but I can show here, because you guys know there's a lot of folks out there trying to steal my research. But yeah, so let's take a look again. And this, just a moment, please. Yes, right here. So right in between, let's draw our battle of midway for this range right here, which is a possible range. Even if we do this above, which is likely, okay? So you guys see here, 100%. This is the previous, remember, previous all-time high, okay? Most of times, we already saw this on ADA, Cardano, for example, and many other coins, and not only on crypto, on stocks, precious metals as well. Most of times, not always, we end up with bull breaks, and then we retest the previous 100% level, okay? So this is one of the reasons this range right here can play out our battle of midway before later bullish continuation, and then bang. Okay, actually this should be something, oops, just a moment. Okay, so this analysis, as you guys can see, it's for now and 4 years ahead. Okay, and one of the reasons I'm making this kind of macro analysis is for later research, okay, because many of my previous analysis targets were hit and this method is 100% accurate, okay. But yes, we are going to update this later and see how things are playing out. Let me clean this chart. A moment. Yeah, so now let's jump to the micro. Let's take a look on OBV. Yeah, so here for OBV we don't have any divergence. It's just volume by volume, nothing special. Let's take a look here on volume itself. Yes, so this is ranging volume. And the thing is, if we measure only this guy here, this scenario here, you will see this is the golden mini. Okay, let me show you right now. Actually, I won't exclude this one, just a second. I will move all the way to the right, okay, so we can have a better understanding. Now I'll go take this out. Okay, so as you guys can see, or just a second. Yeah, so as you guys can see, we had the retrace back to the mini, okay, which is very common to see bullish retraces back to this level and then and then follow bullish continuation, okay. But one of the reasons we can use this one, it's accurate, yes, it's accurate, we can use it, but the problem is if we go for the bigger picture, this scenario here is not going to be accurate, okay. So if we are going for a two-step process, micro to macro, then it's okay, thumbs up. If we are going from macro to micro, this is not going to work, okay. Oops, I had to bring this, yes. So again, remember, healthy retrace back to the golden mini, all the way bullish, cool. Now let's go back to the bigger picture, which is always in control, okay. And so as you guys can see here, we end up rejected so far. It's not over yet. We still have 3 days ahead for this chart, but so far end up rejected from the golden, which is normal on the first attempt. But a thing that we have to watch out for is this. First try, rejected, rejected, and rejected. But it's not over. Let's take a zoom and check this out. Just a moment. Here we have a very key thing, very key, that I'm going to show you right now. So let's go for the first. So the first, we had the tail at 321.7539, okay? And if you can see here, very small, a marginal higher high compared with the previous one, which is a bullish trigger for later continuation. So remember, 321.75, 322.780. So it's $1 ahead, okay? This is a bullish trigger. And in this one, so far, we have 331, okay? So in other words, this was our first high, marginal higher high, and then now another higher high, okay? So this is all the way bullish, okay? Despite the rejection, doesn't mean it is bearish at all, okay? Not bearish. But this guy here we have to watch out for, because we have not only one but two strong levels here that are behaving as resistance now, which is the $3 range and 3089, okay? And now let's take a closer look. Oh, let me see, just a moment. If I'm not missing anything here. So higher lows, low, higher low, higher low, aggressive one. But the thing here is, if we have two possible scenarios here, okay? We stay above before the bull break, or we do a small retrace before a straight bull break, or even more sideways before the bull break, okay? And the thing is, as you guys saw, this level right here, oops, yes, it's this too, sorry, yes. So this range right here, it's a very key one, okay? If the bulls defended before, if by any means we go down again, just a little before the bull break, okay? Don't worry. They are going to defend their higher low again and again, okay? Because they are still in control. So yeah, let's take a closer look now for the daily. I mean the 3 days. Let's take a look on volume as well. So we have ranging volume after the golden range, which can be FOMO. These last two, the big ones here, can be FOMO. I'm not saying it is, but it is possible, especially the last one, okay? Because people were buying at the resistance level, while others were buying at a key and strong support level, okay? So this suggests us that this can be FOMO. Anyway, the bulls are in control, and at this point it doesn't matter how this is going to play out. A thing that we have to watch out for is Bitcoin, because it is likely for Bitcoin to have a bear break in the coming days, okay? And if this is true, we have to see how Tezos is going to behave. A very important thing as well. Let's go for the daily. Okay, here on the daily we have a bad guy. This candle here, it's a bad candle. Okay, so the bulls charge, the bears take profits, the bulls try to push again, but they are not able to make a new high. Okay, that's why we're still trading inside the previous candle, and this is bearish in the short time frame, okay? This can be about a few days, 1 week or 2 weeks, okay? And also remember, If this scenario is true for the bears right now, we should probably be looking for that healthy retrace that's going to give us a higher low with a much better bullish perspective for later bullish continuation. Okay, just a moment. Yeah. So some people may say, well, but we are closing above this level and this is bullish. The thing is, back in the day, as you guys can see here, they made the same thing. Bearish candle, close at above, try to charge, bears in control, because so far this range is still in control of the bears. Okay, but in the bigger picture, remember the bulls are in control. Okay, so some people just look for scenarios like this. Straight moves all the way up and all the way down. That's not how markets and assets behave. Especially now, 2020, crypto assets, they are starting to behave like other assets. For example, metals, stocks, because we have smart people in the markets. So the market behavior starts to change, okay? All these moves that we saw back in 2015, 16, it's very unlikely to happen again, especially because we have much more money in the markets today, okay? This also changed the mechanics and the behavior. So let's go for the 4 hours. So this is not a rising wedge. Just a moment. Okay, so if we go from so it's not clear because the tails are far away off from the bodies in the bottom. So it's not symmetrical, but can be. Uh, it's not ascending channel, and it is not a perfect rising wedge. Okay, but just for the sake of this example, let's go for a rising wedge. And let me see here. Okay, so as you guys can see, the bear's aggression are starting to become more strong. Can you guys see how the nature of the columns are changing? So less aggressive, more aggressive, all the way aggressive. Okay, this can be the clue for coming bear attempt, especially if we are going for a 50% retrace here, which is still all the way bullish. That should be something like this. If this scenario happens, 50% for the bears payout before bullish continuation, which some people would say, oh, but we are going down. No, I don't like to go down. Folks, doesn't matter. We exchange a little for more. That's how it works. Okay. Sometimes we give up 5%, 10% to make 20, 30%. Okay. That's a wise way to push the markets. And yeah, so also, if we take a close look here, let's jump into it. A moment. Let's see how aggressive these guys are. Yes, so this is great. Actually, this is a nice aggression. I will explain what's happening here. This rejection from 3 and 22, it's bullish. Okay, it's bullish, it's great. Doesn't matter if we end up with a bearish candle. The thing is the trigger. Okay, we have the trigger, and this is great news. And also, as you guys can see, is a straight fight. Okay, all the way up, and all the way down are extremities, right? The only problem here, this pattern is too tight. And this is not enough to constitute or to make, craft or build a strong move up or down. We are not expecting move down, but for a strong move up, okay? Because something like this, for example, people who are not aware with the pattern system, they will draw something like this. Just give me a second. Yes, so they will make a draw like this one, and they will say this is all the way bullish. The thing is, it is bullish, but it's not all the way bullish, okay? Because the range is so narrow that doesn't give space for the bulls or for the bears to do their thing in the proper way, okay? But even though, yes, we still can end up with a bull break, yes, of course. But a better scenario, as you guys can see, we have a lot of bearish activity, right? It is starting to increase. Let's take a look again. Less bearish activity, more bearish activity, and more bearish activity. You can see by the size and the body of the candles. Okay, so it's becoming more strong and aggressive, which means, in other words, it would be best to leave more room for the bears to take their profits. Make a bigger scenario, leave the bears comfortable, ease the bears off before looking for a bull break, okay? Because if they keep fighting all the way non-stop, up, down, up, down, up, down, so something like this. Let me see if I can draw it properly. At some point, the bears will jump in because the range for them to take profits is not it's not enough. Okay, it's like they need more time, and also this time would be beneficial and healthy for the bulls as well. Okay, so this is one of the reasons I don't believe this is a better scenario, but it's still bullish, right? That's what matters. I'm just sharing my 50 cents and a broader perspective on the bigger picture. Let's take a quick look on the 30 minutes. Yeah, so as you guys can see here, uh, actually, maybe we can place trades here soon. This is not financial advice, okay? This is for research and entertainment purposes only. So, broken, not a broken, but a mirror here. Yeah, so let me see the time frame here. 17 tomorrow. Yeah, we can expect a outcome from this structure here before, let me see, before tomorrow night. Yeah, so just a moment. Uh, Midnight, 8:30. So it looks like we can have the outcome of this structure before 8 a.m., 7 a.m. As you guys can see down below, 5 and 36. Yeah, so probably it's going to play out soon, this one here. And let's do another measure here, just a moment. Hold your heads, cool your jets, we are almost there. So as you guys can see, the bulls have more strength for now, compared against the bears. It's still somewhat close, but it's not the same. Okay, we always have to acknowledge the difference in the size of the difference in the numbers size. Okay, it's crystal clear that the bulls have a bigger range compared with the bears here, and it is possible, folks. It is possible to have a move like this. Okay, but again, we can look for a easy off the bears before a bull break, before the next morning. Okay, so for now, this is my 50 cents here for Tezos, folks. I hope you guys enjoyed this analysis. I hope this improved the way you look at the charts, read the bigger picture. And yeah, thanks for your support, thanks for your time and your patience as well. And don't forget to smash the like button, share with your friends, and subscribe as well. Your support is very important. And thanks. I will see you guys soon. See ya.